Have you ever thought about your annual salary or your business's annual income and thought, wow, I'm making good money, only to ask yourself at the end of the year, where did it all go? Or worse, you spent more than you made because of credit cards. Well, what if I told you that that big annual number that you're proudest of, the one that you put on loan applications, the one that you tell your friends that you made, is actually sabotaging your financial future? I want to help you really look at the difference between what you think you make and what you actually get to keep. And if you don't know this number down to the dollar, you're planning your financial future with fantasy math. So let's do it. Let's look at the difference between the gross income number and the net income number. Let's look at the gross income and net income in a way that will change how you see money and how to explain this to teens and young adults so that they can manage money better too. Welcome back to Paths to Fortunes, the podcast where we cut through financial confusion to help you build real wealth. I'm Heidi Fore, and today we're talking about the one number that changes everything, your real take-home pay. Over half of Americans live paycheck to paycheck right now. They don't have a clear picture of net income and a plan for where it's going to go in the next 30 days. And this could continue forever, every month for the rest of their life, paycheck to paycheck. Or they could stop right now and figure it out. Here's the thing, you cannot make smart financial decisions with fuzzy math, with fantasy math. Whether you're on the employee path, the self-employed path, or any of the 7 paths to fortunes that we've discussed so far, knowing the difference between what you make and what you keep changes everything about your financial future. Let's start with the basics. Gross income is the total amount of money that you earn before any deductions are taken out, before any expenses are paid. If you're self-employed, it's the total amount that your clients pay you before you pay for business expenses. If you own a rental property, it's the total rent collected before you pay for repairs, property management, or taxes. And if you're an employee, it's the total amount of money on your paycheck that you're promised per hour or per year before any mandatory deductions get taken out of your paycheck. That's gross income. And here's the truth. Gross income sounds shiny and impressive, but the number that actually builds your wealth is what you do with your net income. Net income is what's left over after taxes and expenses. Net income is the money that hits your bank account that you can spend, save, give, or invest. Now, let me give you 2 ways to picture this depending on what year you were born. If you were born in the 1900s, like me, imagine a watering can filled to the top, sitting next to 7 plants. The water in the can is your gross income. But before you get to water your plants, some water evaporates. Taxes and withholdings. It never makes it to the plants. The water that's left in the watering can is yours to use. The 7 little plants have little signs next to them that say income taxes, retirement, savings for assets, living expenses, gifts, and there's one bright flower labeled fun. If you own a business, add another plant for business expenses. As you tip the can, you can choose how much water each plant gets. That's budgeting. Some people have a very healthy and bright fun flower, but their savings for assets plant is withering. If you were born after the year 2000, imagine your gross income is like getting a brand new phone. You're pumped. You've got all this storage on your new phone. But here's the deal. Right out of the box, some of that space is already taken up by system files and pre-installed apps that you can't delete. That's like taxes and deductions. They come off the top, whether you like it or not. And what you're left with on your shiny new phone is usable storage. That's your net income. Now, imagine you have to decide how to use that remaining storage wisely. You're going to have photos and videos and games and apps. Same concept. Money you get as a paycheck is a thing that you decide how to use. No matter which path to fortunes that you take, the key to growing a fortune is to spend less than you make so that you can give some away and save to invest and ultimately retire. Why is this important? Why does this matter so much? Because many people make financial plans based on their gross income, but that's not the amount that they actually can spend or save. If you're not clear on your net income, you could easily overspend, get into debt, and struggle to save. Here's a real example. Let's say you're a teacher making $48,000 a year gross salary. And does that mean that you could buy a $48,000 car? No. After deductions, you might take home $38,000 a year. That's about $3,200 per month to cover your mortgage, food, utilities, car payment, and savings, not $4,000. So do you see the problem? Some people think that because they make $4,000 a month, that they're like, oh, yeah, I could afford that car, make $4,000 a month. They don't take into consideration all of these other things. If you are self-employed or a business owner, your deductions look a little bit different. Your gross income might be the total revenue your business brings in. But before you get to your personal net income, you have to deduct your business expenses, anything from supplies, office rent, marketing, software, professional services. And then you've got self-employment taxes. This covers your Social Security and Medicare contributions, since there's not an employer that's paying a portion of that for you. And then your income taxes are calculated on your net business profit. And for real estate investors, the gross income is the total rent you collect, but your net operating income is what's left after you pay property taxes, insurance, maintenance and repairs, and property manager fees if you have a property manager, utilities if you cover utilities, and any vacancy costs. Here's the bottom line. Make your business plan based on gross income and net income. Make your savings and investing goals and personal budget based only on net income. Gross numbers matter for loan qualification and comparing opportunities. Net numbers matter for daily spending decisions, cash flow planning, and real wealth building, and emergency fund requirements. I've coached people who thought they were making $250,000 a year, but after taxes, insurance, and business costs, their net was closer to like $80,000. And that's good money, but it leads to very different life choices. Businesses fail because they can confuse gross with net. Families struggle because they spend like their gross is their net, or they don't know what they're spending at all. But when you truly know your net income, you can make smart decisions with your lifestyle, save consistently, and invest confidently. Now, I promise to tell you how to explain these concepts to kids or teenagers, young adults. Having these conversations early on can be incredibly empowering for them and give them the financial knowledge that they need to be a foundation for financial knowledge in the future. It will set them up on a path to financial literacy. One thing you could do is show them your pay stub, or if they have their own pay stub, discuss it with them. Explain where the money goes before it hits yours or their checking account. Here's a small business example you can share with a teen. Your $25 an hour babysitting job pays $100 gross for 4 hours. But after your gas to get there and the snacks and coloring book that you brought for the kids, you net $90. Here are your action steps from today's episode. First, calculate your real take-home pay. Use your actual pay stub if you're an employee, or the actual amount that came into your bank account if you're self-employed or a small business owner. That's the number that you budget with. Get very clear about how much your net income is per hour so that you know how many hours you need to work to afford something. For example, if you're going to buy something, ask yourself how many hours it takes to be able to buy it in terms of net dollars per hour, and see if it's worth that much of your time. If you don't feel like you are making enough, quote, enough per hour, do something this week that will cause you to get paid more. Like get good at networking with people who are well connected in your city. Increase your skill set to be able to solve problems for employers that you'd want to work for. Take classes, get certifications, be what they want, be able to handle situations for the place where you want to work. Then, when you get the better job, don't increase your lifestyle costs. Keep the savings and invest it. Figure out if it's possible to create a 20% margin, meaning if your net income is $4,000, can you live on $3,200? That $800 buffer becomes your wealth building engine. I suggest having 4 bank accounts. A bucket of cash for paying your personal expenses every month and donating to causes that you care about. B, savings for income taxes. C, savings for an emergency. And D, a wealth building bucket. Second takeaway today, action item for you. If you're self-employed, track your business expenses for 1 full month. You might be surprised how much of your gross income isn't actually yours to keep. Do this every month and review with someone who's good with numbers, like a business coach, consultant, or business mentor. Third action item, if you're analyzing a rental property, make a spreadsheet that lists every possible expense. The gross rent number is just the starting point. Always calculate cash flow after expenses, not just rent collected. The important thing on the road to financial freedom isn't how much you make, it's how much you keep. Fourth action item, teach this to kids. Talk to them about real numbers, not just theoretical concepts. But of course, speak about it in a way that's void of emotion. Money doesn't need to be emotional. Make it normal to talk about money in a non-emotional, matter-of-fact way. Reassure kids and teens that you are watching the money and we have enough as a family. Don't send them into scarcity mode about money or any kind of fears that there won't be enough of something. It's just not fair to put grown-up problems on kids. Now, this isn't about making them grow up too fast, this concept of talking about money. It's about establishing solid knowledge about how to use money as a tool to provide things for people that we care about, which includes experiences and financial security. There's a balance, there's a balance that's important in talking about money with kids. Here's the bottom line. People who are wealthy are not always the people with the biggest gross income. Wealthy people are the ones who know how to make good choices with their net income. You will never get ahead financially unless you can live on less than your net. Build a margin between what you make and what you spend. If you don't know what you spend each month on your lifestyle, track your spending. Of course, you could just write it on a notebook, but it's a whole lot easier if you use an app like Monarch Money or Quicken or YNAB. On future episodes of Paths to Fortunes, we're going to dive into ways to use money other than savings to invest in real estate, like using equity from houses that you own and having debt partners and equity partners for buying assets. I'll share 3 specific methods that I've personally used, including the one that helped me buy 4 properties in 2 years without touching my savings. So whether you're a teacher, a nurse, a real estate investor, a real estate agent, an entrepreneur, what I talk about in these Paths to Fortunes episodes can fast track you on your financial freedom path. Understanding your real net number and saving a portion of it means being prepared for future opportunities. And that's what I hope that you are looking out for and you are just preparing your world for is future opportunities. When you know exactly what you're working with, you can make confident decisions that move you toward financial freedom one step at a time. If this episode gave you clarity, hit that subscribe button so you don't miss an episode from me in the future. And share it with someone who needs to hear this, maybe somebody that just does not understand gross income, net income, and savings. And sign up for the Paths to Fortunes newsletter at pathstofortunes.com so that you can get helpful tips, tools, and budgeting templates when we send them out. This podcast is about creating real wealth for real people. I'm Heidi Fore, real estate investor, business coach, and financial coach. Thanks for letting me walk beside you on your paths to fortunes. This podcast is for informational and entertainment purposes only. Nothing in this episode should be considered financial, legal, or tax advice. The examples used are for illustration and do not guarantee future results. Always consult with licensed professionals before making financial decisions. I hope you found this episode valuable, and I'll see you next time on Paths to Fortunes.